Good morning. We are on the record in the matter of the appeal of Jonathan Warycha, OTA, case number 18093806. We are in Los Angeles, California, and it is September 19th, 2019. Time is approximately 9:59 a.m. The panel of administrative law judges consists of Douglas Bramhall, Andrew Cui, and myself, Alberto Rosas. We're going to state your names for the record. We're going to start with the taxpayer and move our way down. Sir?
Jonathan Warycha.
Topher
Tuttle.
Maria Brosterhouse.
Good morning. This hearing is being recorded by our stenographer, so I do want to remind everyone to just speak slowly and to speak one at a time. I'm going to go over a few housekeeping matters. Primarily, I want to talk about the telephonic pre-hearing conference that was held on August 28th. I just want to summarize a few of the key orders resulting from that conference. Number one, we agreed that Mr. Warycha's exhibits 1 through 3 were admitted into evidence. Number two, we agreed that FTB's exhibits A Alpha through O Oscar were admitted into evidence. We agreed that only one witness, Mr. Warycha, is permitted to testify at today's oral hearing. We also agreed that the parties will comply with specific time limits and that today's hearing should take no more than 1 hour. Mr. Warycha, is this an accurate summary of the pre-hearing conference orders?
Yes, sir.
FTB?
Yes.
Mr. Warycha, we're going to get started with your testimony. I believe we discussed that you will read from a prepared statement. Before you begin, if you can please rise, and our stenographer will administer an oath.
Please raise your right hand. Do you solemnly state or affirm the testimony you are about to give in this hearing shall be the truth, the whole truth, and nothing but the truth?
I do.
Mr. Warycha, whenever you're ready, you may begin.
Okay. In the matter regarding my 2013 tax refund, I mailed in my tax return on April 11th, 2018, which is before the 4-year statute of limitations on April 15th, 2018. I mailed in my tax returns for 2013, 14, 15, 16, and 17 on the same day. FTB claims that they received my tax returns for 2015, 16, and 17 on April 15th, 2018, but did not receive my 2013 tax return until May 15th, 2018. This is unusual considering I sent this all on the same day. They should have all received all of the tax returns on April 15th, 2018 within the statute of limitations. The reason I haven't been able to submit these tax returns previously is because I was in a motorcycle accident and I was recovering. I was in a coma and was caught behind in the hospital, recovery, disability. When I didn't receive my tax refund, FTB notified me that they never received my 2013 returns, so I faxed it again on 5/30/2018. It's only upon reading FTB's opening brief that I discovered that they, in fact, did receive my original tax return on 5/15/2018. I'm not sure why I was told to fax it again when FTB clearly received it on 5/15/2018, and I was never told I wouldn't get a refund when they told me to fax it again. If FTB really did receive my tax return on 5/15/2018, they wouldn't go through the trouble, or I wouldn't think they'd go through the trouble of having me faxing it again. They would have simply told me that I wasn't within the statute of limitations and wouldn't be getting a refund. In addition, I never received notice of the levy prior to the collection of the $121.18 on May 10th, 2017. FTB stated they will refund me this amount plus accrued interest, which I never received. The tax refund in question isn't a lot of money, but it means a lot for what I've been through in the hospital bills. I've already paid through my taxes and just don't really understand why this 1 year wasn't received, and I did fax it. I have that as well, saying that it was received on September 18th. That's all I really have right now.
Thank you, Mr. Warycha. At this point, I'll turn it over to Franchise Tax Board in case they want to ask any questions of Mr. Warycha.
No questions.
Mr. Bramhall, do you have any questions?
Yeah, I noticed that the return that was faxed to the FTB on the 30th had a signature date of 4/11, but the return that they received by mail had a signature date of 4/23. So is there an explanation why the two returns, that are the same return except for the date on the signature lines, explanation why that's a different date?
I just could have made a mistake. It was 4/11. I'm not aware of it. Is it 4/11 that was signed and then they signed it back? It came back on 4/23.
The return that you faxed on the 30th had at the bottom where it was signed, had a signature date of 4/11. You were saying that you mailed it on 4/11 and they should have received it by 4/15.
Right.
But the one that they received by mail, prior to the time that you faxed that return, they received by mail on May 14th. It had a signature date on it of 4/23, which was significantly later than 4/11. So I'm wondering what the explanation of the two different signature dates is.
I'm not sure, to be honest with you. I said the 2013 through 2017 on the same day, and then refaxed it. Faxed it. So it says September 18th, but I really don't know what else to say.
Okay, all right, sure. No, that's good. That's fine. Thank you. I just wondered if we could clarify that.
Yeah, I don't.
That's fine. Thank you.
Anything else, Mr. Bramhall?
Nope, that's all. Thank you.
Mr. Quinn, any questions?
Yes. So the copy of the return that you have is Exhibit 3 that you submitted. Is that a copy of the return that was mailed in on 4/11, or is that something that was prepared separately and faxed on 5/30?
Both. It was sent in through the mail on April 11th, and then refaxed again on April 15th.
Oh, so then you made a photocopy of it before you sent it in to FTB? Just because these are handwritten returns, I was just wondering if you just refilled out the return.
I could just make copies of it.
Oh, okay.
That's all for all the years, for all the statements.
Okay. And FTB, I'm just curious. I think the appellant was saying that FTB doesn't dispute that the returns for 15, 16, and 17 were received on 4/15. Is that correct?
Let me check. 14, 15, and 16. So sorry, 2015, 2016, 2017 were received on April 15, 2018. 2014 was received on May 15, 2018.
Okay. Okay, thank you.
Mr. Quinn, do you have any other questions?
That's all at this time, thank you.
And Mr. Warycha, as for me, I don't believe I have any questions at this time. So at this point, we're going to turn it over to the Franchise Tax Board. You have up to 10 minutes for your presentation. You may begin whenever you're ready.
Appellant's claim for refund for the 2013 tax year is barred by the statute of limitations. Revenue and Taxation Code Section 19306 prohibits respondent from crediting or refunding an overpayment when a claim for refund was not filed within 4 years of the due date of the return or within 1 year from the date of overpayment, whichever is later. In this case, appellant's tax return for 2013 was due on or before April 15, 2014. However, respondent did not receive appellant's 2013 return until May 14, 2018, which was more than 4 years after the due date. In addition, respondent has already refunded or will refund at the close of this appeal all payments received within 1 year of the filing date of appellant's claim for refund. The remaining overpayment credit at issue relates to withholding amounts, which by operation of law are treated as a payment received on the original due date of the return. Since this payment was received beyond both the 4-year and 1 year statute of limitations periods, respondent is barred from issuing a refund. Although appellant argues that he filed an earlier 2013 tax return, he has not provided any evidence in support of this contention. Accordingly, respondent's denial of appellant's claim for refund is proper and should be sustained. Thank you.
Mr. Warycha, as we mentioned, you do have a chance to present an additional argument, a rebuttal argument to anything you just heard. You have up to 5 minutes if you so choose.
Thank you. I had $3,000 taken out as wage garnishments for 2013 for my taxes. My refund was only for $2,400, although I did get the wage garnishments back. Yeah, I was never notified that we were going to be doing that. That's the $121.18. The $2,400 that is due as a refund, and came in overdue, but actually was sent out with all the other years. The reason, I just want to explain the reason why I had to file the 2013 all the way back there is that was a year that I was in the hospital for a year. And so it was coming off of a lot of things that were behind that I was catching up on. But I believe everything that I sent did go out on that date and did get confirmed that it went out on that date, except for 2013. So I just don't understand why I wouldn't be refunded if I already paid those taxes anyway from my checks.
Thank you, Mr. Warycha. At this point, I'm going to turn it over to my co-panelists once again to see if they have any questions of either side. Mr. Bramhall?
No questions.
Mr. Quigg?
I don't have any questions.
TV, is there anything else you would like to add?
No.
Mr. Warycha, you are the taxpayer, you are the appellant, so I want to give you the last word. Now, other than what you've already told us here today, and other than what's included in your appeal and in your exhibits, is there anything else that you think this panel needs to know in order to make a well-informed decision?
No, sir.
Thank you very much. In that case, this concludes today's hearing in the matter of the appeal of Jonathan Warycha. The record is now closed and the matter is submitted as of today, September 19th, 2019. Both parties will receive this panel's written decision no later than 100 days from today. Thank you all very much.
Thank you.
We will take a brief 5-minute recess before the next case.
Good morning. I want to thank the parties for coming today. John Johnson, I'm the lead ALJ for this hearing. With me today are Judge Kui and Judge Cho. Let me start by having the parties introduce themselves. We'll begin with the
John Saunders, power of attorney for 609 North Hayworth.
Keen for Franchise Tax Board.
Natasha Page, also for Franchise Tax Board.
All right, thank you. You introduce yourselves on the record as well, so we go on the record. We're going to start off the record, take care of some housekeeping issues to make sure we have an efficient hearing. I think we might have some new exhibits as well to go over. Generally, the hearing is going to proceed in the manner that was outlined in the minutes and orders, which I think both parties received. Did you receive that, Mr. Saunders?
Yes.
Okay. I'll start with the issue on appeal. I have it as whether appellant had reasonable cause for the late filing of his return. Does that sound accurate?
Yes.
Yes. Interest is also a component component, but it will only be refunded as much as the actual penalty, which is the main issue. Now getting to the exhibits, I believe we have new exhibits today. Let me start with that. Appellant, you brought some new exhibits, is that right?
That's correct, Your Honor.
Right, I have two exhibits here. It looks like one is a bank checking statement. Is that correct?
That's correct.
Okay. I'll treat that as your exhibit 7. And the other exhibit is a letter from the IRS, is that correct?
Correct.
Okay. I'll treat that as exhibit 8. Franchise Tax Board, did you have a chance to look at the 2 exhibits?
Yes, I did, and no objections to any.
Okay. Franchise Tax Board, did you have any objections to the other exhibits? I have exhibits number 1 through 6.
No objections.
Okay. And appellant, you also received the exhibit log that we mailed out to you?
Yes, I did.
Okay. I have respondents exhibits A through H. Did you have any objections to those?
No, I didn't.
Okay. And H is actually the new exhibit, which is FTV's memo that was sent in earlier this week. Franchise Tax Board, did you have any other exhibits that you'd like to submit?
Early this morning, I filed stipulations. I don't know if you would like to enter that as an exhibit or outside the exhibit.
Okay, we'll do that. We can call that respondent exhibit I, the stipulation. And you got a copy of that as well?
Is that,
Yes.
yes, I did.
All right. I see your signature on there, so. Okay. All right, so once we go on the record, I'll introduce appellant's exhibits 1 through 8 to the record, and response exhibits A through I, noting no objections. Mr. Saunders, next item I had to go over was witnesses. Were you going to have any witnesses today?
No, sir.
Okay. In your presentation, were you going to be testifying as to fact, or were you just providing legal arguments?
Legal arguments.
Okay. You're not going to introduce anything not in the record based on your personal knowledge about what happened, or do you think you will?
Yes, I will.
Okay.
Code sections.
Okay. I guess I'm asking, do you want your testimony to be considered as facts for us to consider? Do you want us to swear you in so that it is given the weight of evidence?
Yes.
Okay, we'll do that. And no other witnesses besides yourself? Right?
Correct.
Okay. Franchise Tax Board, do you have any witnesses today?
No witnesses.
All right. In the proposed outline, I had scheduled 10 minutes for appellant to provide your opening statements. Is that going to be sufficient for you?
Yes.
After that, Franchise Tax Board, you'll have 10 minutes. We'll go back to Mr. Saunders for another 5 minutes on rebuttal. The panel might have questions for both parties. Then we'll do 5 minutes closing, starting with Franchise Tax Board, ending with you, Mr. Saunders. Let me know at any time during the process if you have any questions. Feel free to interrupt me if I'm trying to move to the next step and you can skip something, or you're just not clear on exactly what you're supposed to do next. Don't worry about that, just let me know if you have a question. I might interrupt you as well if I think we're getting off schedule or we're going to field from where we need to be for an efficient hearing. That's all I had as far as the preliminary matters. Do you have any questions from appellant before we get started?
No.
All right. And any questions?
No questions.
All right, thank you. Is my panel ready?
Yes.
All right, and stenographer is ready. All right, we'll now go on the record. This is the appeal of 609 North Hayworth, LP. It's our OTA case number 18093719. It is 10:25 a.m. on September 19th, 2019, here in lovely Los Angeles, California. I'm the lead ALJ for this hearing, John Johnson, and let me say good morning to my co-panelists. Good morning, Judge Quee.
Morning.
And good morning, Judge Joe.
Morning.
Let me ask the parties to introduce themselves. We'll begin with the felon.
John Saunders, power of attorney for 609 North Hayworth, LP.
Keenan for Franchise Tax Board.
Natasha Page, Franchise Tax Board.
Thank you. While I am the lead for purposes of conducting this appeal, the panel of the 3 of us will make a decision on the appeal. We've read the briefs, we've seen the exhibits, and we'll make our decision based on what's been submitted in the briefs and admitted as evidence, as well as what you present to us today. If there's anything you want us to consider, make sure that you do have it stated today or in your briefs and exhibits. issue we have on appeal is whether appellant had reasonable cause for the late filing of its return for the 2016 year. We are going to admit into evidence appellant's exhibits 1 through 8 and respondent's exhibits A through I. Before we went on the record, the parties indicated they had no objections to those exhibits. We're now ready to move on to the parties' arguments. We'll start with Mr. Saunders. Are you ready to begin?
I am.
Let me start by swearing you in then. You stand and raise your right hand. Do you solemnly affirm to tell the truth, the whole truth, and nothing but the truth?
I do.
Thank you very much. You can begin.
Thank you. The facts of this case are that the appellant filed the tax return late. The appellant filed for a limited partnership on December the 1st, 2016. He conducted no business during the year of 2016 and believed that because there was no business conducted, they did not need to file the tax return. The first monies that were deposited into the bank account, which was exhibit, I believe it's 7, were on December the 20th, and those dollars represented investments by some of the limited partners, but no income or expenses were paid during the year. The property that was intended to be purchased for this partnership was purchased in 2017. In looking at Revenue and Taxation Code 17936, in part it says that a limited partnership shall not be subject to taxes imposed if the limited partnership did no business in California during the taxable year. What constitutes doing business? Doing business per section 23101 and 19317 states doing business means actively engaged in any transaction for the purpose of financial or pecuniary gain or profit within the state of California. Clearly, there was no intent for profits or income or gain during the year 2016. The issue is whether the taxpayer was willfully negligent in not filing the tax return. They believed that what they had done was correct. In addition, the purpose of a partnership return of income is not to tax, is not a tax return to compute tax, but to provide partners with their share of the income and loss from partnership activities. The purpose of the penalty for failure to file is to encourage partnerships to file so that all partners will be able to file accurate and complete tax returns. Since there was no business engaged and no profit or loss passed through to the partners, the failure to file had no impact on any partner's tax liability. Assessment of the penalty in this case does nothing to further such purpose. The $200 delinquent penalty for non-filing is appropriate in the taxpayer's opinion. The penalties per partner are not and would seem inappropriate. It seems that we have form over substance here rather than substance over form. In addition, the IRS, and I provided you with a copy of a letter from the IRS dated May the 1st, 2018, reflects that the IRS abated the penalty for the same neglect of filing the tax return. That's all I have at this time.
Thank you. Let me ask for his franchise tax work. Were there any factual statements in there that you needed to ask questions clarifying, Mr. Saunders?
No.
Okay, thank you. And are you ready to proceed with your presentation?
Yes.
Maybe.
Appellant received late return filing penalties for the 2016 short period year, appellant alleges that it thought it did not have a filing requirement for the 2016 short period because it did not have any considerable business activities. However, the law, as brief, clearly states that appellant has a return filing requirement as soon as it filed a certificate of limited partnership with the Secretary of State on December 1st, 2016. Case law also supports that the ordinary and prudent act in these type of situations is to follow the law. Not being aware of the law is not a basis for abatement. Furthermore, unlike the IRS, respondent does not have any authority to abate the penalties solely based on compliance history. Therefore, respondent properly denied appellant's claim for refund, and appellant further stated and cited to Revenue and Taxation Code 17936, which is a 15-day rule. However, that statute doesn't apply here because appellant was late for 30 days. Accordingly, if respondent properly denied appellant's claim for refund, I'll be happy to answer any questions.
Thank you. Let me see if the panel has any questions for you, Mr. Saunders, before we move on to your rebuttal. Any questions, Mr. Cho?
I don't have any questions for Mr. Saunders.
Okay. And Mr. Brewer?
Yes, I did have a question. Were you the return preparer for the appellant?
Yes, we were the return preparer. The facts were that the appellant did not provide us with any information for 2016. They believed there was no return required, and so they did not provide us with any documentation. We did prepare it in 2018 when we received information from 2017 showing that they had received approximately $800,000 in investor contributions. We then informed them that they needed to file a tax return for 2016, and we did so.
Okay, so then the appellants believe that they didn't have a filing obligation based on only receiving capital contributions. That wasn't based on any reliance on advice provided to them. That was just by an accountant or a CPA or your firm. That was just their belief that they didn't have to file.
Correct. When they provided us the general ledger for 2017, we noticed that they had balance forward in the bank account, and then we explored it further and realized that they had received contributions in 2016. I think the first one was December the 20th.
Okay, and I did have one question for FTP, if you don't mind.
Let's go to the rebuttal quickly,
Okay.
and then we'll do questions before they're closing.
Okay.
That's all right. Mr. Saunders, you have 5 minutes for rebuttal. If you have anything that you want to address that FTB stated, you will also have your 5-minute closing later on, so you can also save it for then. Would you like to give a rebuttal now?
No, I'll save it for them.
Okay, and let's go back to Judge Quee with your question.
Thank you. I was just curious, I noticed that there is 2 late filing penalties, the 19131 and also the 19172 deferred partner penalty, and I guess delinquent filing penalty. I'm just curious if there's any issue with stacking 2 late filing penalties for the same tax year.
There are no issues, and this the statute clearly provides for partnerships. They are charged with 2 different types of late filing penalties. One is, as you stated, the delinquent filing penalty 131, and the other one is a per partner penalty. And a reading of the statute doesn't say that you are the FTB should only impose one penalty over the other. Both apply here.
Okay, thank you.
Thank you.
Any further questions?
No further questions, thank you.
Okay. Judge Show?
Just a couple quick questions, I hope. With respect,
Sorry. No.
with respect to the 17936 code section, and this is to the FTB,
17936. Okay.
the one that Mr. Saunders just referenced and
Yes.
just talked about afterwards. It's if the limited partnership did no business in the state during the taxable year and the taxable year was 15 days or less, then the limited partnership is not subject to tax. Is that correct?
Yes, that's correct.
Okay, and I think you just said the FTB's position is that because this was 30 days, sorry. because this was 30 days, that this section would not apply?
Yes, it wouldn't apply. And as briefed, appellant has a filing requirement regardless because appellant filed a certificate of limited partnership.
Okay, so the day limit doesn't really matter. It's the fact that the appellant filed a certificate of registration with the Secretary of State on December 1st. Is
Yes.
that correct? Okay. Mr. Saunders, do you have a response to that?
I'm only using that code section for the purpose of my client's issue about willful neglect. They believed, and again, ignorance is not an excuse, but they believed at the time that because they did not receive any funds from other than partners' contributions, and they didn't occur until December the 20th, that they didn't have any business activity in the state of California. So my argument is that they weren't willfully neglectful in the non-filing, which is the reason for the penalty.
Okay, thank you for that response. That's the only question I have.
I have no questions at this time. I have no questions, so we can move to the closing arguments. Franchise Tax Board, are you ready for your closing argument?
We have no closing argument.
Okay. Mr. Saunders, you have 5 minutes if you'd like to provide a closing argument.
Thank you. Again, I think it comes down to the issue of the willful neglect and that the client voluntarily took the corrective measure to file the tax return when they came to the realization that they had not followed the law. And again, the issue of the purpose of the penalties, or partner penalties, was so that partners had all of the information they needed to file their personal returns for the year 2016. Since there were no profit or loss, income or expenses, that they didn't need a K-1 from the return of income to make that determination, and that they were able to file their personal tax returns in a timely manner, and they were complete and accurate returns to the best of our knowledge. That's it.
Thank you. We have the evidence and the record, arguments in the briefs and oral arguments today. We have a complete record from which to base our decision. Let me ask Franchise Tax Board, any final questions before we close this matter?
No questions.
And appellant, any final questions?
No final questions.
Thank you. I want to thank both parties on the appeal. The record is now closed. This concludes the hearing on this appeal. Parties should expect our written decision no later than 100 days from today, September 19th, 2019. And with that, we are now off the record. Good morning. Thank you both for coming today.
Good morning, Your Honor.
We'll start off the record, just take care of housekeeping stuff and exhibits and et cetera, and then we'll proceed to go on the record later on. Pre-hearing conference was held in this matter, and the minutes and orders that were sent out to both parties gave a rough outline of how it would proceed, but we'll go over that as well once we get started. The issue I have on appeal is whether appellant section erred in the Franchise Tax Board's proposed assessment of additional tax, which is based on federal determination. There is also an accuracy-related penalty as a component of the amount on appeal, but appellants indicated that they're not separately arguing that it's a standalone issue. It would just be abated or reduced if they prevail on the underlying assessment. We sent out the exhibit list to both parties. There was a ministerial error that left off most of the opening brief exhibits for appellants. They submitted an email, which I believe was also sent to Franchise Tax Board, that indicated that there were 13 exhibits that were left off that should be included. Does that sound accurate, appellants?
Yes.
Okay. We'll go ahead and add those exhibits back on. They will be tacked on. You currently have 5 exhibits on the list. We'll add those as items 6 through 18. With parties like me to read those off individually, or do we all understand what those exhibits were?
Well, actually, the first 5 exhibits are not, I don't know where those came from. So we don't, I've numbered these for purposes of asking Mr. Creamer questions. I'll be referring to 1 through 13 and not, you know, these 5 exhibits were not, that I think 1 or 2 of them were included somewhere in the various package, but I really don't know where these numbers came from or, you know, or how they got on there. So a couple of them I've never seen before.
Sure, we'll address those in a second. But as far as exhibits 1 through 13, did you need those read off individually, Franchise Tax Board, or do they all look familiar to you?
They look familiar. Our appellants provided us hard copies of the exhibits that they emailed.
Okay, thank you. Now, as for the exhibits 1 through 5 appellants that we have listed from you, those did all come from your briefs that they're attached to. I know you indicated that item 1 there, power of attorney, is no longer relevant. Is that accurate?
Yes.
Okay. We'll not include that in the exhibits. Is that okay?
No objection.
And then you also referenced Exhibit 3, which is a blank 1099 miscellaneous. That was with your reply brief. It's referenced in your reply brief as well. Did you want that included, or do you want it not in it?
You can leave it in if it's from our reply brief. You can leave it in. It's not that big a deal.
Okay. We'll do that. And then you also had, did you have other questions about Exhibits 2, 4, or 5?
No.
Okay. And then you also provided today a declaration from Joyce Chan?
Correct. And that declaration addresses how, in our last submission to the tribunal, we provided a social security number for the attorney for whose declaration we have. And there was an issue that came up as to whether or not that attorney had filed a return. And we provided that social security number. I wanted to have at least an explanation of the record as to how we came up with that using public records, since it is a little unusual for somebody to be able to locate a complete social security number. And we didn't want anybody questioning the veracity of the number. And it belonged to Ms. Schultz. And then we've asked the Franchise Tax Board to agree that this is, that there was no return filed by Ms. Schultz, so we can do that on the record, and that they're amenable to that, because they had looked up the social security number.
Okay. Franchise Tax Board, any objections to the declaration?
No objections.
Okay. And is that right, that on the record we will state that she did not file a return? Schultz.
For the record for purposes of the record, we'd like to say that there was no record return filed for based on that social security number.
Okay, we'll get to that once we're done your record. Sounds good. Thank you. And appellants, did you have any questions about respondents' exhibits? They're listed as A through L. They were all included with the briefs. I think L came in after the pre-hearing conference.
No question, Jim.
Okay. And no objections?
No objections.
Okay. What we'll do is we will, for purposes of understanding the exhibits you're referencing, we will renumber your exhibits 1 through 13, as you have them in your email. You all have. We will list the declaration. Were you going to reference that as Exhibit 14 today, or you can just reference it as the declaration from Ms. Chang?
We can do that as 14, Your Honor. Okay.
And then we'll move Exhibits 2, 3, 4, 5 down to 15, 16, 17, and 18.
That's fine.
I don't know if they'll be referenced that much anyway. All right, I will admit those once we go on the record. Going on to witnesses, there was a question as to whether appellants were able to bring an extra witness. Who are you going to have testify today?
Mr. Creamer.
Okay. And respondent, no witnesses for you today?
No witnesses.
Okay. And I believe we discussed 5 minutes for the testimony. Do you think you'll need longer?
I think we said it was a 15 or 20 minutes for the testimony. I think 20 minutes is a fair
Sorry.
estimate.
You're right, 20 minutes. I see it right here. we'll have 20 minutes for appellant husband's testimony. Is he going to testify from narrative? Are you going to ask him questions? Is he going to prepare a statement?
I will ask questions.
Okay. And will he be referencing anything or reading off anything?
He won't be reading anything. I will ask him questions about a couple of exhibits.
Okay.
So I have an extra exhibit for him to look at. So
As long as the exhibits, that's fine. And Franchise Tax Board, did you need to look at his exhibits, his copy?
For clarifications, will you be referring to the exhibits already on the record?
yes.
Yes. We don't need to read them.
All right, thank you. Okay. So we will start with Mr. Creamer's testimony. We will have Franchise Tax Board will have 5 minutes to ask questions. We will then have panel questions and 5 minutes for you to ask final redirect questions. After that, we'll move into arguments. Appellant will have 15 minutes, Franchise Tax Board 15 minutes. The panel will ask questions if they have any, and then we'll do 5 minutes closing respondent and 5 minutes closing for appellant. Any questions about that process?
No.
We did have some stipulations that were mentioned at the pre-hearing conference. We did not get an official signed stipulation sent in, but I have 3 of note that I think might be helpful. I'll read them now, and then if it's agreeable, I'll read them into the record once we start. The first stipulation I had noted was that appellant stipulated that they concede an amount of unreported taxable income of $21,797.52. And I believe at the end of the day, if you do prevail, you still concede that that amount was unreported, correct?
Correct.
Appellant stipulated that they are not seeking any additional deductions for business expenses or otherwise, except for the deduction of $341,494.48 that they argue is attributable to clients and Mrs. Schultz. Does that sound correct?
Correct.
Okay. And the parties stipulated that to the best of their knowledge, the federal action on appellant's 2010 tax year account is final. Is that correct?
That's correct.
Final being there's an assessment, yes.
Correct. Okay. Okay, I will reread those once we get onto the record. Are there any final questions before we move forward, Alan?
No.
Franchise Tax Board?
I do have a question for appellant. Would you like to stipulate, because there are 2 items on the assessment. One is related to $32,799 legal and professional services adjustment. Would you be conceding that this allowance to be, would you make a concession on that allowance?
We have not raised that issue.
Okay.
Is my panel ready? Is stenographer ready?
Yes, Your Honor.
With that, we'll go on the record. This is the appeal of 609 North Hayworth LP, case number 1. Oh, sorry. It's not that case. This is the case of Michael F. and Mitsuru Kramer, 1801-0027. It is 11 a.m. on September 19, 2019, here in downtown Los Angeles, California. I'm the lead ALJ for this hearing, John Johnson. Let me say good morning to my panelists. Good morning, Judge Margolis. Good morning, Judge Day. Let me have the parties introduce themselves for the record. We'll start with appellant.
Michael Creamer, C-R-E-A, New York.
Good morning, LeVar Taylor, counsel for Mr. and Mrs. Creamer.
Thank you. And respondent?
Keenan for Franchise Tax Board.
Maria Brosterhouse for Franchise Tax Board.
Thank you. The panel has your briefs. We have examined the exhibits that have been provided. I'd like to remind everyone that we are an independent agency, so there's no ex-parte communications. What we have from the briefing, any additional exhibits that have been submitted, and what you present to us today is what we'll base our decision on. Fully respect the importance of the decision to be made in this appeal, and I appreciate your efforts in getting to this point. The issue we have on appeal is whether appellants have shown error in FTB's proposed assessment of additional tax, which is based on a federal determination. We can discuss the exhibits off the record, and I will admit into evidence exhibits 1 through 18 for appellant, and exhibits A through L for respondent. The parties indicated they have no objections to those exhibits. We have 3 stipulations I'll read into the record before we begin. The first, appellants stipulate that they concede an amount of unreported taxable income of $21,797 and 52 cents. Appellants stipulate that they are not seeking any additional deductions for business expenses or otherwise, except for the deduction of $341,494 and 48 cents of the $363,292 in income shown on the 1099s that appellants argue is attributable to clients and Ms. Schultz. The parties stipulate that, to the best of their knowledge, the federal action on appellant's 2010 tax year account is final. If the parties have any other stipulations they wish to make, they can do so when they give their presentations. We're now ready to move on to the testimony portion. Let me ask appellant, do you have any questions before we proceed?
No.
And franchise tax board, any questions before we proceed?
No questions.
Okay. Let me swear in Mr. Kramer. If you can stand and raise your right hand.
Do you solemnly affirm that you will tell the truth, the whole truth, nothing but the truth?
Yes.
Thank you. Please proceed. And appellant, you may begin when you are ready.
Thank you. Mr. Kramer, are you a practicing attorney?
Yes, I am.
And you admitted in California?
Yes, I am.
How long?
Since about 2000.
Could you just briefly describe what your practice was like in 2010?
I had a handful of clients and very active civil cases.
The cases you just described, were they contingency cases?
No.
Did your office handle contingency cases in 2010?
Not at the beginning, but later on with Lisa Schultz we did.
Okay. And can you tell us how you first met Lisa Schultz?
So about 2002, 2003, before I was really practicing, I was doing something called special appearances. That's where an attorney will appear for other counsel in a case. And I had an office near the Santa Ana courthouse in downtown Santa Ana. And Lisa Schultz ended up renting an office right across from mine. That's where I met her.
And can you describe what happened in your relationship with Ms. Schultz?
She was a very nice person, and we got to we were across from each other, and I got to know her a little bit, and then it started to dawn on me that she had a serious drug addiction.
What did you do about that?
I contacted what's called the Alternate Bar Association. It's an organization that helps attorneys with addiction problems.
So, in other words, to rephrase it, you turned her in? Is that a fair characterization of what happened?
Yeah. I contacted them about her drug problem. Yes.
Okay. And what happened then after that? With respect to Ms. Schultz?
She ended up going into a drug program, and then I guess later on she ended up in drug court. So I don't know the exact circumstances, but I know she had some issues with law enforcement. But fortunately, she was already part of this bar program to help attorneys work out their life.
At what point in time did she not have an office next to you for the first time?
So I ended up leaving. No. She in about 2000, probably about 4 months after I contacted the bar, she ended up leaving, and then I left soon after that. Moved to Huntington Beach.
Okay. What was your office like in Huntington Beach?
It was a rather large office, but it was in an industrial setting. So it was all based on. It wasn't like executive suites that you would think of. It was more of businesses that did manufacturing.
And did Ms. Schultz later come back into your life?
Yes. So
could you describe what happened?
Sure. So. Probably late 2009, she contacted me out of the blue. I'm sure she got my information from the bar, She said she wanted to meet, and I agreed. And she told me about her life. She had basically hit bottom. She lost custody of her child. She had a home down in Lisa Viejo. She had lost that, and she basically was just looking to restart. And she wanted. I got the impression she wanted to know if maybe I could help her out.
And did you help her out then?
Not at first, but I told her that there was an open suite next to mine that she could rent, and she ended up moving into that office.
Okay. And did you later get her involved in cases being handled by your office?
Yes. So after she moved in, and she had a couple cases, and then she told me she needed more work, and she asked me if I had any ideas. And I was working, like I said, I sort of had a handful of cases. I wasn't really looking for any extra work, but I knew of a firm called Warycha in York that they advertised nationally for people that had been in collisions, and they needed more attorneys in Southern California that could handle the property damage aspect or diminished value. And I told her about that, and I said, they already know me, and if you'd be willing to take on the work, they could send business over.
Did she actually work on those cases herself?
She did. Initially, I sort of showed her. She had a lot more years of litigation than I did, and but I showed her how to do a complaint for these type of cases, and then I gave her some of the authority that I've been using to prevail. But I hadn't done it in several years.
All right, and these cases that you took in, were they all diminished value cases?
With Lisa Schultz, all except for there was one personal injury case that she had with a relative of hers.
And just to the record, you explain a little more detail of what you mean by diminished value.
Okay, so when you have a collision, an automobile collision, and it's not your fault, you're entitled to a couple of things. One of the things you're entitled to is have the car repaired, and if it is repaired, sometimes the value of your car, even after the repair, is not worth the same amount of money that it would have been had it never been in an accident or a collision. And that difference we call diminished value. But there's a lot, unfortunately, there's a lot of California attorneys that they pursue the personal injury, but they sort of ignore the property damage aspect.
Okay. Now, could you turn to the declaration of Lisa Schultz, which has been marked as Exhibit 10?
Okay.
And turn to the second page of that exhibit, if you would, please.
Okay.
And you can see there's items A through J listed. The first one is listed Century Surety Company. The last one is United Services Auto Association. Could you look at that list and tell us whether those cases were the diminished value case and the one personal injury case that Ms. Schultz worked on?
That's correct. The item F was the one that had to do with a boating accident and her relative.
Okay. Now, these cases, were they worked under your office's name?
Yes.
Okay, and then did you sign engagement letters with these clients?
No, I didn't.
Who did?
That probably would have been Warycha in York, I would imagine, or Lisa Schultz.
Okay, but did you have an arrangement with respect to the payment of fees?
Yes, we did.
Okay. Could you turn to your declaration, which is Exhibit 13. and the document attached to that declaration, which is called retainer agreement.
Yes.
Is that the type, did you enter into this type of agreement in all of these cases?
Except for the personal injury, yes.
Okay. And how did the personal injury agreement differ, if at all, with respect to this case?
That's something Lisa Schultz did. But it would have been it should have been very similar to this.
Now, with respect, were there settlements that came in these cases listed in Ms. Schultz's declaration during 2010?
There were settlements that came in.
Okay. And could you describe what, physically, what happened with respect to checks or money coming in and being paid out?
So the first couple settlement checks that came in, I put them into the trust account, and they were based on insurance. They were from an insurance company, so usually it was a certified check. And after just 1 or 2 days, then I would withdraw the amount of money for the client, and then also give Lisa Schultz her share.
And when you say her share and the client share, how much did the clients receive from the money that came in?
So 60%.
60% of the check that came in?
60% of the check that came in was for the clients.
Okay, and I'll refer to as the attorneys, which could include you and Ms. Schultz. How much did the attorneys get?
40%.
Okay. Now, out of this 40% that came in, did you have an understanding with Ms. Schultz as to how much you were going to get? Yes or no? Did you
Yes.
have
Yes.
Okay. Could you describe that understanding, please?
Yeah. So, since she was the one working up the cases, but I was the one that was referring the cases to her, we agreed that she would get 85% and I would get 15%.
Okay. And is that what happened?
So that was what was supposed to happen. Unfortunately, it didn't always occur that way. But
so what actually did happen then in some cases?
Well, there was just a lot of times where she had one reason or another that she needed the entire 40%. But since I don't have good records, I've already talked to you about conceding, and I'm just going to claim that I did give the 15%.
So just to be clear, as you sit here today, you believe that you got less than the 15%, but you're willing to accept responsibility for the 15%.
That's correct.
And that would be 15% of the 40% of the check.
Of the 40% in the fees that we received, 85% went to her, and I'm claiming 15%, even though it wasn't always, I didn't always get the amount.
Now, you have bank records for 2010, correct?
I did have bank records for
Okay, you don't have those records today, do you?
No, I don't.
What happened to those records?
So I ended up relocating from the Huntington Beach office over to Anaheim, and in that move, there was a lot of things that I didn't end up taking with me, including these bank records.
If we had those bank records today, would they help show that money was actually paid to Ms. Schultz?
No.
Why not?
The reason is when I would go to deal with the trust account, I would do a withdrawal for the amount of money that had come in. One portion would go to the client, then the second portion would go to Lisa, and then whatever I didn't pay to Lisa from the 40%, I would take. And then later on, after she relocated, I ended up just doing a withdrawal and then transferring the amount over to Lisa, and then she would pay the clients.
Okay, now you mentioned that Ms. Schultz relocated. Could you discuss what happened when she relocated and what happened?
So initially when we were working these cases, when she was working the diminished value cases, it was going very smooth. Then she got a new boyfriend, or a boyfriend, I should say, and then there started being disruptions, and then she told me that she wanted to move from Huntington Beach down to San Juan Capistrano, which was closer to where she was living at the time, which was in Dana Point.
Okay, and so then she relocated her office. Did she take the physical case files with her?
She took all the cases for the diminished value cases.
Have you ever seen those case files since then?
No.
And did you stop working with her at some point?
I did.
Why?
Probably the biggest reason was on the case where she settled with her that she settled with the insurance company for the personal injury to a relative. She didn't want to give me the 15%, and at that point I decided I wanted to wrap it up. Didn't want to deal with her anymore on these cases.
All right.
And also, so one more thing, and then also I started suspecting that she might start to have addiction problems again. So after I knew that she started drinking, and then I warned her several times that if she wasn't careful, that would probably lead back to a drug addiction.
Now, Mr. Creamer, have you ever taken $1 of money of your clients that belonged to them and misappropriated it?
No, never.
Has anybody ever filed a bar complaint against you with respect to on that topic?
No, never.
Now, you did not issue a 1099 to Ms. Schultz, did you?
I did not.
Could you explain why?
I wish I did. The situation was that when I got when these funds came in, they're in my account for just 1 or 2 days, and then I ended up giving Lisa the money. But what I didn't realize was that 1099s were issued. I didn't have a chance to actually see them. Unknown to me, it seems like 1099s were issued, but they were sent somewhere else. I didn't receive them.
Well, you say there's 1099s issued. Have you ever seen Forms 1099 issued with respect to the cases that are listed in Ms. Schultz's declaration?
No.
So you never at any point in time?
No, not that I know.
Now, you recall your 2010 tax return being audited by the IRS, correct?
That's correct.
And you were represented by another individual, correct?
Yes.
Is that individual an attorney?
No, he's not.
An accountant?
No.
During the IRS audit, did you ever get a chance to make a presentation to them like you did today?
No, I did not.
Did your representative ever let you talk to the IRS?
No.
Did your representative ever ask you to provide documents to the IRS?
No.
Do you have an understanding at all why today you have how it became that you got a bill or the IRS made an assessment when you were contending that you didn't owe this money?
No.
You can vote.
about 2 minutes.
Okay. Did you have a separate employer identification number for your law practice?
Not that I recall.
Did you use your social security number?
I use my social security number.
The Schultz Declaration, you drafted it, correct?
I did.
Could you describe the circumstances under which you drafted it?
I understood that I was being audited. At first, when I heard how much money that I had made, I was shocked. And then when I learned it came from 1099s, and then I was like, who would issue me these 1099s? And then when I saw it had to do with insurance companies, then it dawned on me these were the diminished value cases and also the personal injury case that she had handled. So I know I was able to get a hold of her, and I told her I'm going to need you. I'm being audited for money that you made, and I need you to sign a declaration saying that you're the one who received the money. And she agreed. But then I couldn't get a hold of her. Turns out she was incarcerated. I didn't know it. But then finally I was able to find her, and then have this declaration signed, notarized at a bank.
And at any time during, I'll go back to the IRS audit before I conclude. At any time during the IRS audit, did you ever tell the IRS that you agreed that you should be taxed on this money?
No.
Have you ever agreed that you should be taxed on this money by anybody, IRS or Franchise Tax Board?
I've always maintained I didn't get this money.
And you communicated that to the person who was representing you previously, correct?
That's correct.
All right. Thank you.
All right, thank you. Let's turn to Franchise Tax Board. You'll have 5 minutes for any cross-examination questions.
We have no cross-examining questions.
Let's go to the panel then. Let me ask if any questions from Judge Ted and questions from Judge Mabolis.
Yes, I do have a few. I have a few.
Yes, sir. Yes, sir.
Yeah. Is that better?
Yeah. Yes, Your Honor.
This person who represented you before the IRS, how did you find him? I mean, what credentials did he have?
It's my understanding he's a EA agent, and he was recommended. He's sort of I guess he has Asperger's. He's on some things he's a genius. I thought this would be.
I noticed that you claim that he, screwed up your case with the IRS. I mean, are you pursuing any sort of malpractice case against him or anything? Is there some agreement there?
I
can confer with your counsel.
No. I don't need to confer. It's difficult in this setting to describe the individual, but he's not a typical person. He's got Asperger's, and it would be I don't know where to turn, but it'd be sort of like in some ways it would be like a child.
Okay.
I didn't realize it was that bad until later.
So you had to, the checks were deposited without your involvement, the checks that you received from the insurance companies, the settlement checks. Did you have any participation in the deposit of those checks?
I did.
So
Into the trust account.
You deposited them in your trust account.
That's correct.
And then you said that the bank records wouldn't help show that you paid Lisa Schultz anything or the clients anything, but how did you get the money out of the account?
Just we'd withdraw the money.
Cash?
I would draw it and put it into a cashier's check and give one for the client and one for Lisa with the proof of payment to go for her to put that into the file.
So You weren't able to get proof of the cashier's checks or anything, or records of that?
No, I tried.
And how did you compute, did you just compute the 341,000 of the amounts paid to Ms. Schultz, so based upon the percentages? Is that purely the way you computed the amount that you believe you paid Ms. Schultz? It was simply 85% of 40%?
That's a position I'm taking right now. There were many times when she got more than that, but since I don't have the records, and she and I agreed that I would get 15%, that's what I've agreed to. We're just, I'm conceding the 15% of that, as if I got paid the full 15% of the 40.
And the declaration from Ms. Schultz was was executed in March of 2013, but it was notarized the following year, 2014. So I'm just kind of curious, did she sign it in 2013 and then you needed to get it notarized for the FTB, or did you?
Meisner first? You like him, perfect.
I do.
Dr. Meisner, can you tell us where you currently reside?
I currently reside in Austin, Texas.
And can you briefly provide us your educational history from college forward?
I went to Citrus Community College and transferred to Cal Poly University of Pomona, where I received my bachelor's degree, and then did my master's and my doctorate, PhD at the University of Southern California, with an emphasis on organizational behavior and leadership.
And do you currently have any ownership in an entity called CSBT Enterprises, Inc.?
My trust, my irrevocable trust does, yes.
And do they own all of it?
Yes.
And do you know what type of entity this is?
It is an S Corp.
And what's the difference between an S Corp and a C Corp?
An S Corp doesn't have double taxation. The key is that all of the tax liability flows up to the individual.
And did that entity previously have a different name?
It did. It had the name of BNI.
And what about the other entities, the other two corporate entities that are parties to this lawsuit? Do you have any ownership, you or your trust have any ownership interest in that?
Yes, 100%.
And are they both S Corps as well?
Yes.
Now, during December of 2014, were you involved in a transaction where BNI Enterprises, BNI Corp, and Paradigm Publishing sold certain of their assets?
Yes.
Can you describe that transaction for us? What were you attempting to accomplish with that transaction?
It was an asset purchase where the private equity company purchased the assets of BNI Enterprises, BNI Corp, and Paradigm.
And what line of business were those entities in?
BNI is a referral marketing platform for small businesses and for salespeople in large companies to help them increase their business through referrals. We have 9,190 groups today in 70 countries around the world.
And what role or responsibility did you have with those entities from their inception to the time you sold caused the assets to be sold?
I was, and still am, the founder of the organization. I was CEO for most of that time. At the time of the transaction, I had an acting CEO because I was in the midst of dealing with a cancer diagnosis.
And can you take a look at Exhibit C in the binder that is before you, which I believe is page 172 of the record? Can you identify this for us?
Yes, this is the asset purchase agreement between us and the private equity company.
And if you turn to page 179, do you recall what the purchase price was for the entity?
I do recall. I don't have to turn to the page, but I will. It was $36 million.
And was that all going to be paid in cash in connection with the transaction?
No, it included assumed liabilities, include promissory note, and it also included a reinvestment back into NewCo, where I ended up owning 20% of the new corporation.
Now, if you were the founder and owner of these entities, why weren't you the seller?
The entities were what was sold. I owned the entities, but the entities are what was sold.
Assets were sold as opposed to the equity in the entity.
Correct, assets were sold.
Now, how was the purchase price that you mentioned, how was that going to be allocated amongst the assets that were being sold?
That was completely determined by the sales agreement, which said that the buyer would allocate the assets to the 3 different entities.
Now, before that allocation would occur, if you look at section 1.5 of this agreement, there was something referred to as closing date adjustments. Do you have any understanding as to what adjustments would need to occur before any allocation would happen?
I believe it'd be all of the assumed liabilities, the promissory note, my reinvestment back into the company.
So they had some time to go in and look at what the liabilities were and all of those things and make adjustments?
Yes, exactly.
And they were given about 90 days to do that?
Yes.
And you had the right to object to any adjustments they made?
Yes, I did.
And did you make any objections?
I did not.
Okay. Then if you turn to 1.8 of the purchase and sale agreement, there's a reference to something called allocation. What did that refer to?
That referred to the allocation of the asset value for each of the 3 companies, and they had 60 days to do that after the closing statement was calculated.
Now, did you have any say or power to determine that allocation?
No. None.
And consistent with the terms of the agreement, the seller had no obligation to provide that allocation to you until something about like 150 days after closing. Isn't that correct?
That's correct.
So you wouldn't have known anything about that allocation. The transaction's dated December of 2014. You wouldn't have known anything about that allocation until May of 2015, correct?
No, it was complex, and they were doing it.
Do you recall whether they gave you that allocation timely?
No, I think they gave it late.
Now, at the time of closing, was there any mathematical formula you could apply to the purchase price and this contract that would tell you how the buyer would ultimately allocate?
No, because it was very complex.
It was in their mind, too. It was something that they could decide.
Yes.
Now, you understood, didn't you? You're a sophisticated businessman, that when you entered this transaction, both you and your entities would have some tax liability. Did you not?
Yes.
And did you have anyone advising you with respect to this tax liability?
Yes.
And who was that?
Carolyn Denny.
And how long have you known Ms. Denny?
I have known Ms. Denny for more than 35 years.
And how long has she been is she the CPA for you and your company?
She is the CPA still for me and another company I own, not for the current B&I company, no.
And did Ms. Denny have any experience, role, or responsibility in your prior networking company?
Yes, quite a bit. She was the auditor of B&I Franchise Corp, which required an annual audit because it was a franchising arm. So she was actively engaged in the company.
And wasn't she also one of your first members?
She was the very first member of the very first chapter of B&I 9,190 chapters ago.
Now, you knew at the end of 2014 that you would have to you would owe estimated taxes both personally and for these entities.
Yes.
Now, take a look at Exhibit K, which is a copy of Ms. Denny's declaration she filed in this case. I'd like you to look at the very last page, which is an exhibit, which is an email from Ms. Denny to you, dated December 12, 2014. Just looking at the email at the bottom, what is she telling you to do here?
She's telling me to pay the amount due for quarter. I believe that was quarterly, the first line. The second line is that there'll be additional amounts due by the end of the year, by the 31st. And then she also asked for the closing documents to determine how to allocate the transaction.
Okay, so she's telling you, reminding you in December that you're going to have to make your estimated payments.
Yes.
And then right above that, you respond to her. What do you tell her?
Are we looking at The bottom of that?
Yeah, the one right above her, you see the bottom, the emails are strange, they always go backwards. So the email at the bottom is the one at the bottom of the page, right there. That's actually her first email to you, and then you respond to her. What do you say in response when she asks you, tells you you're gonna need to make your estimated payment?
You're talking about the one that says, okay, I'd rather go over than under the estimated payment, and if I need to prepay any of the additional money, I'll pay it early.
What did you mean you'd rather go over than under?
I didn't want to have any issues with any taxing authorities. I wanted to, and I made it clear to her, not only in writing, but many times verbally, overpay just to make sure that we don't underpay anything.
Well, if you turn 2 pages further, which is a December 11th, 2014 email that you write to Lori O'Brien and Jose Burnell. Who are those individuals?
They work for Carolyn Denny, and I CC'd Carolyn on the email.
And what are you telling them in this email about what you want to do with respect to your estimated payments?
I was okay with what they suggested, but I wanted to make sure, uppercase, yelling, I want to make sure, absolutely sure, we pay more tax than what's needed. And if you have to round up, don't hit the minimum.
Now, in the email, going back to the last page, the email where Ms. Denny responds to your December 12th, 2014 email, she has a reference there in all caps, I need a copy of the closing documents. Why did you think she needed a copy of the closing, or why did she tell you she needed a copy of the closing documents?
She says it here, to allocate, or to start the process of allocating the transaction.
Now, couldn't she could just look at those documents and figure out the appropriate allocation?
No.
Why not?
Because the buyer, the private equity company, was the one to determine what the allocations would be, and I was told that it would be a problem for us to do it because they might not match.
And did you provide her a copy of the asset sale agreement?
I did.
But she was able, looking at the documents and looking at the transaction, to figure out the gross liability of all the entities, was she not?
Yes, she was able to take all of the entities in our personal and come up with one number that we would absolutely own.
So you had a number, you had 3 entities. What did she tell you to do with the estimated that she came up with?
So she told me she'd had conversations with the taxing authority, and that they said if you didn't know the allocation, put it all in the personal bucket, because it all flows up to the personal bucket. And so we overpaid in the personal bucket based on Carolyn's advice from her conversation.
But wait a second, you know the difference between you personally and your companies, don't you?
Yes.
Well, why would it make sense to put the money in your personal?
I was relying on the advice of a CPA who had talked to the state, who she said told her, put it all there if you don't have the allocation. We can allocate it later.
Now, turning to Exhibit D in the binders, and I'm particularly going to be looking at the last page of Exhibit D, which is page 239 of the record. Do you know how much you ultimately deposited into your personal accounts related to these companies?
Yes, on December 30th, we deposited $950,000.
Now, did you have an understanding as to whether or not that was just about what the liability would be?
No, I specifically asked her to put in more just in case there was any mistake.
Now, if Miss Denny had told you to put that money in a different bucket, would you have done that?
Absolutely. It didn't matter to me what bucket the taxes went into, just make sure we pay in full.
So if she had told you that the taxing authority said, no, don't put it in that bucket, put it into one of the 3 companies, or split it between 3 companies, you would have done that?
Absolutely.
Now, did you benefit in any way by taking $950,000 and giving it to the state of California?
No, I would have liked to have had that money to invest, to put in savings or make some kind of investment.
Now, why didn't you just divide the amount in 3 and put it in all 3?
That would have created a problem for the buyer, and they would not have been, it would have created legal issues to do that, because I had a contract that said it had to be allocated by them.
Now, do you recall that in October of 2015, you received a notice of a tax deficiency?
Yes.
And take a look at Exhibit G, which is the last, Exhibit G, which is page 250 of the record. There's a letter here from Ms. Denny to the Franchise Tax Board. Do you recall what you discussed with Ms. Denny?
260, you said?
Yes, 260.
Okay, I'm sorry, yeah.
You recall the conversation with Ms. Denny about how this tax deficiency was going to be addressed?
Yes, she told me, this has happened in other situations with tax authorities, and she was in conversation with them, and she said that that she believed, based on our conversations, that if we paid the personal, the $900,000, it could be allocated later, and that sounded really reasonable to me.
And in response to Ms. Denny's letter, do you know whether or not California just took the money, the overpayment in your personal account, and allocated it as it was determined into the various companies?
No, I don't believe they did.
In fact, in April of 2016, didn't you get a refund?
I did.
And would that refund amount have been sufficient to pay those taxes?
Yeah, it was $900,000, I think.
And do you have a sense as to the amount of taxes the three entities owed?
I believe it was $325,000.
Something like 325. So
yes.
The state of California had more than $600,000 of your money that you didn't owe them.
That's correct, and I didn't mind. I just wanted it taken care of in full.
And when you received the refund, what did you do with it?
Well, when I received the refund, it was a shock because I thought this would all be worked out with the allocation, and so I immediately then paid this amount that they're saying that I still owed, even though I paid them $900,000 more.
So you had Ms. Denny take $325 and pay the allocation as
Yes.
appropriate?
Yes, immediately.
Okay, and but you also paid the interest and penalties they had?
I did, because I didn't want it to accrue while we were working out what I thought would be worked out through conversations.
And in the history of your working with Ms. Denny and various tax entities, have there been other times where issues have come up and you've been able to work them out?
Yeah, a number of them. And Carolyn's great at talking to the tax entities and showing, where there might have been miscommunication, and there have been a number of cases. So that's why I felt very comfortable that this would get addressed until I got a check for $900,000.
Now, do you believe you should be liable for these interest and penalties?
Absolutely, positively not.
Why not?
Because I overpaid. I would have put the money anywhere somebody told me to put it. I overpaid. It just seems unfair to be charged for something that I overpaid. May I just say one thing? It's all the same transaction. So we're talking about different companies, but it was all the same transaction. And on the same transaction, I overpaid.
I have nothing further.
Thank you. Franchise Tax Board?
No cross-examination.
Okay. Anyone else have any questions? No.
Then you're done, and you can.
Yeah, I have some questions, sorry.
I don't apologize.
It's okay. I wasn't quite clear, when did the purchasers provide the tax allocation to the S corporations or to Ms. Denny?
I couldn't give you the exact date, but I believe it was in 2015.
So there was an actual document provided that had the allocation?
If so, I don't think I saw it, but she did.
Okay.
I relied on her to give me her CPA, if I heard her accounting advice.
Okay. And you said you know the difference between C Corps and S Corps.
Yes.
California has this quirky, 1.5% any level tax on S Corps. So when Ms. Denny told you to pay the tax at your level, the shareholder level, you didn't question, well, what about the 1.5% any level tax, which is not an issue, I guess, at the federal level, but in California we have that.
I relied on my tax professional who has done a fantastic job for me for 35 years. So I did not ask her that question.
Okay. No further questions?
I just have one clarifying question. When
your representative was asking about the allocation, whether or not you had any participation in the allocation. Just to clarify, did you or any other representative of the appellants have any participation in that allocation process?
No.
Thank you. Okay. Any other questions? Thank you very much, Ricky.
Thank you.
We will call Miss Denny now. It'll be the same, I'll refer to the same binder, yes. It's just a binder, that's just a binder of the exhibits.
Okay, I'm ready.
Good afternoon, Ms. Denny. Can you tell us how you're currently employed?
I'm the managing partner of Denny and Company LLP, a certified public accounting firm in Valencia, California.
And can you briefly tell us about your educational background from college forward?
From college forward?
Yes. You go to college?
I did.
And where did you go and what degree did you get?
I have a degree, a Bachelor of Science degree with an emphasis in accounting from the University of California.
And are you a licensed?
Southern California.
And are you a licensed CPA?
I am a licensed CPA. I have been licensed since 1984.
And can you, once you graduated from USC, can you briefly review for us your employment history? What did you do with your life?
Want to go backwards or forward?
Let's go from college forward up to today.
Oh, okay.
And just the highlights. We don't need to fill out all of them.
Yeah, I like to tell a little story, but no, I had to get my experience in order to qualify to get my license. So I worked for small CPA firms for a while, and then I did in order to get some specific training, I worked for one of the big eights for a while. After that, then I had the opportunity to become an auditor for the city of Glendale, which was right close to home, and I had young children at the time. So I took that job, and then those auditors recommended me to the city of Beverly Hills, where I became the chief financial officer. And I was there for about 5 years and did some really good things while I was there. After that, that's when I started my own practice in 1984. And have been doing that ever since.
And you worked in, you said you lived in Glendale. Did you work for the city of Glendale as well?
I did, yes.
And then if you turn to, hopefully you'll be able to find this. You look at the record, there's numbers at the top. There's, and if you go to page 8, numbered at the top, which would be at the beginning, I'm just gonna ask you if that's a copy of your CV.
Oh, page 8?
It's not 8 pages in, it's just when they start numbering the pages. Is that a copy of your CV?
Yes, it is.
And if you go to the next page there's a history document, a background document about BNI, which we understand is Dr. Meisner's company. How long have you known Dr. Meisner?
Since 1984.
And if you look at this history document for BNI, there's a reference to 1984, and right above that I see your name. What is that about?
He and his friends, Carolyn Denny and several others, hatched a plan.
So you were there when the idea was born.
Well, let me tell you, the 4 of us, the 4 people that you see listed here, were in another networking group because we were all just starting our businesses and we needed business. And we were very unhappy with the situation, so we sat in the back room one day at the restaurant and hatched our plan to start our own networking organization.
Now, we heard how Dr. Meisner built this company to an international company. Were you involved in that building?
Not the international piece, no. But I was president of a number of chapters over the years and brought members into the organization, and all that time being the CPA for the organization.
And in addition to being the CPA for the organizations, have you also provided some personal CPA work for Dr. Meisner or any of his trusts?
Yes, I have. I've prepared his personal returns since 1985. That would be his 1984 return.
And did you learn in the fall of 2004 that Dr. Meisner was contemplating selling the various BNI entities?
No, 2014.
2014, sorry.
That's okay. Oh, I learned it way before that because there was a lot of activity going on searching for a buyer. And so I was involved with him and with attorneys and working on financial aspects or tax aspects of the proposed sale.
If you turn to Exhibit J in the binder before you, if you go to the second page, is that your notarized signature on this document?
Yes, it is.
And is this a document that you prepared on or around July 3rd of 2018?
That's correct.
And do you believe the contents of this declaration are still true and correct?
They are. I think we issued another one on the 26th that has a couple of corrections in it.
Would that be Exhibit K?
I hope so. July 26th, yes, this is the final affidavit.
And this is the affidavit that attaches the various emails I discussed with Dr. Meisner?
That's correct.
And you recall, if you look at the last page at the bottom, I went over this with Dr. Meisner so I can go a little bit more quickly, that you provided him a reminder in mid-December that his estimators were coming due?
Yes, that reminder was because he had regular estimates that were due based on the prior year income. You were required to pay in 110% of the prior year's tax. So he still had those estimates that needed to be paid. Those were paid, and then we worked out an estimate of what additional amounts that would need to be paid to cover the taxes related to the sale of the three entities.
And that's the email at the top of this page. You're discussing various tax payments for two of the entities, and then you reference that you need to see the sales document for allocation?
That's correct.
And looking at Exhibit C, the very first page of Exhibit C, is this a copy of the sales document that Dr. Meisner provided you?
That appears to be correct, yes.
And if you go to section 1.8, which is page 183 of the record, you can see that at the top. Did you learn in your review of the agreement about how the value of the assets would be allocated amongst the three companies? I'll let you get there.
I learned that the buyer was going to make the allocation. Is that for 183? Where do you want me to look?
1.8.
Okay,
And is that the paragraph on allocation?
that's correct.
And that would have been the paragraph that you would have looked at to determine how to allocate the proceeds amongst the three companies?
That's correct.
And did it provide you a mathematical formula to figure that out?
Afraid not.
But you were able, at least from knowing the value of the transaction and the entities involved, you were able to determine what the total tax would be, could you not?
Yes, I could.
So what was the problem?
Well, the problem with this paragraph, and I believe it's in this one, where it indicates that the seller is required, or was not required, but is responsible for making the allocation.
The seller was? That would be Dr. Meisner, yeah.
I'm sorry. He's the purchaser. The purchaser was required to make the allocation. Okay? And being very familiar with the laws of buy-sells, I'm very much aware that the law says that the buyer and the seller must agree, and they must both report on their respective tax returns the same allocation. And further, with the purchaser being required to make the allocation, we couldn't do anything with the tax return because we could not provide the form, we could not make an allocation, we could not do anything until we had that allocation in hand.
So looking at your declaration again, Exhibit K, paragraph 4, when you were able to figure out the total amount that was due, but you had this problem with the allocation, what work did you do to attempt to get an answer to what you should do, how this should be allocated, or how you should pay this estimated?
Well, I think it was at that time that I looked at different options and different alternatives, talked to several people within my field, and also talked to the FTB, and told them I had a problem. I didn't, at that time, this was a informal call to the FTB, that I was just inquiring, here's my problem, what can I do? I have this situation where I can't make allocations. We know there's a lot of money owed, and how are we going to deal with this? And somehow in that conversation with that person, between the two of us, we sort of said, well, let's have, since it's a pass-through entity anyway, let's have the owners of the businesses pay the entire amount.
Now, you're aware, are you not, that the FTB has no record of that call?
I am. I have several other calls that I made that there isn't any record of either, so.
Would you have any record of that call?
That particular one, I'm not sure. I know I have several other calls that I did make that I do have time and billing records that show I made the calls, and I have notes in my file. But I believe that the particular call I made, I did not identify the client. I did not identify myself as, presenting my CAF number to them or anything like that. So I can understand that that might not have been on the record.
But you knew, did you not, that corporations are different than individuals, didn't you?
Corporations?
Yes.
Of course.
Then why would you believe the advice you were receiving was reasonable? Corporation, different entity, owes tax, I'm going to go put it in the individual's bucket.
Well, I tell you what, I've had many occasions with other taxing authorities, including EDD, where that kind of thing had happened, where with the EDD it was a payroll issue, and they had mistakenly deposited the payroll taxes in a personal account when it should have been deposited into their business account. I made a phone call and they said, oh, no problem, we'll fix it. And that kind of thing happened various other times with conversations with FTB agents. And I felt very comfortable that this was not going to be a problem.
Now, after you reached professional opinion that this was the right thing to do, what did you do?
That's when I asked Dr. Meisner that we needed to make these estimated payments, so that I had estimated the total value of the tax, and let's get these things paid.
And you discussed the matter with him?
I did.
And he followed your advice?
Yes, he did.
And if you look at Exhibit D, which I reviewed with Dr. Meisner, but we can look at it quickly again. Do you recall, it's the last page of it, which would be page 239 of the record. Do you recall how much money you and Dr. Meisner agreed to pay as estimates for these three entities?
Well, we paid $950,000 on December 30th.
And did you believe that Dr. Meisner's estimates and these three entities' estimates would have been that amount? Or these three entities would be that amount?
We knew that I believed that it was more than enough to cover the three entities.
Now, you learned sometime in October of 2015 of a deficiency notice that these entities received, did you not?
I had no copies of the notices yet.
Oh, but if you could, in October of 2015, let's take a look at Exhibit G and your letter. next page. You're right there, it's the next page after G. Third page.
There it is, there it is.
What is this? What is Exhibit G?
This is the letter that I wrote to the Franchise Tax Board requesting that they apply that the money being applied to 2015 of the reference tax return be reallocated to reflect the payments of the taxes due for the entities owned by Dr. Meisner.
And did you send this letter in response to something you'd received from the tax board?
I can't say for sure, I must have.
And did
I just don't write them, just for the heck of it.
Did the franchise tax board respond to your letter?
They said they did, I never got a response.
But do you recall calling them in January of 2016?
I did call. You usually wait anyway because they typically will say it's going to take 2 months to 90 days to get a response. So I wasn't worried until it got to be January and I hadn't had a response. I figured by then there should have been one, so I did make a call. And I think they told me at that time it would probably take another maybe 12 weeks or something.
Well, if you take a look at Exhibit K again, paragraph 8, is that the paragraph of your declaration where you recount that phone call?
Oh, yes, the January 7th phone call, yes, absolutely. That was a very lengthy phone call. It was a very very well received by an agent who seemed to be really interested and who kind of said, I don't understand, why aren't you getting your money back, kind of thing.
So did the agent have complete clarity of what you should have done in this instance previously with respect to the allocation, or was he also confused?
No, he was on my side. He believed that it should have occurred, but he was not aware of any law. He went to his manager, they discussed it. He went to the head auditor and they discussed it. And he came back to me later in the afternoon and he said, we've exhausted every exception we can come up with, and it looks like that they're going to deny your request to have the refunds. And at that time, he made the suggestion that the best thing you can do now is file the next year's tax return as soon as possible, get the money back, and then you can pay the tax.
So when he said they exhausted the exceptions they could find, that related to the ability to take money out of one bucket and put it into a different bucket?
Yeah.
They said they can't do that?
Yeah. He
Okay.
said he couldn't find anything in their regulations that would allow them to do that, and they have to follow the rules.
And so then did you cause Dr. Meisner's individual returns to be filed?
We did. We filed them as quickly as possible.
And then did you get a refund? Did Dr. Meisner get a refund?
He did. I think it came in the end of April.
That it was for about $900,000?
It was.
And then what did you do? What did you advise Dr. Meisner to do with that $900,000, or some portion of that $900,000?
We would pay the liabilities that were due for the 3 entity returns from 2014.
And do you know if he did that?
Absolutely.
And do you recall what the amount was? About $300,000?
Between 300 and 400. I don't recall the exact amount. I know that he ended up being overpaid by between $500,000 and $600,000 altogether.
And you paid not only the amount that was due, but you paid the interest and penalties?
We did.
Okay. I have nothing further.
Thank you. Franchise Tax Board?
No cross-examination.
Thank you.
No.
Judge Gass?
Yeah, I have a few questions for Ms. Denny. How come you didn't, if you knew the tax was going to be due, there's no question tax is going to be owed by the S corporations for the 1.5% annual level tax. How come you didn't divvy it up, maybe 1/3, let's say? Did that ever cross your mind? Hey, maybe I should pay it a little bit here to avoid an underpayment situation and not listen to an FTB, agent on the phone?
No, I definitely considered that. I considered equally or based on their individual sizes. But here's what would have happened if I had gone ahead and issued those filed the tax returns. I would have had to report the income, and I would have had to report the taxes. And I would have been in violation of the purchaser's contract because I would have had to submit the 8954 form, which says it has to agree with what the purchaser and the seller have agreed upon. I didn't have that. I didn't have anything close to really knowing how I might divvy it up. And then lastly, if I had done that, I would have been in violation of the contract. I would now have to file 3 amended tax returns to put the correct information on. And sometimes that can be very unrelenting. And it was a lot of additional fees that my client would have had to pay to have that done.
Well, I mean, instead of filing returns, just estimating it for extension
sending
purposes.
in the money.
Yeah. 1/3 each or something like that.
Yeah.
Just curious on that.
I don't know, it just didn't make sense to me. And I felt so confident because of my past experiences and that this would be resolved the way that we were expecting it to be, that the returns would be filed, we'd know what the final amount was, and I would then contact the FTB, which I did in October, and say, here, you've had the money all this time, let's reallocate it back to the 3 entities. It felt more efficient, it made more sense to me.
Okay. And you said you knew the total correct tax for all 3 entities.
Mm-hmm.
When did you know that?
Well, I wouldn't have known the entire amount at the time we made the estimates. I did not know that until when we actually filed the returns in September of 2015.
Okay.
And I'd like to clarify one point about that is that we, meaning the CPAs, we did not get the proper forms from the purchasers, CPAs, until about 2 weeks before the filing deadline. So I couldn't even do anything until the 1st of September to get a final number. So I worked specifically off of estimates.
Okay, so when you say in your declaration, although I was able to calculate the aggregate amount to be paid by these entities collectively, you didn't know that amount until after the extension time period?
The total actual amount, yes. At the time of the estimate payment, I guess I wasn't even that concerned because I knew he was going to pay so much more than he would ever owe that I didn't try to make a fine tuning of it.
Okay. And then one more question. Between December 2014 and the due date of the payment, which I think is 3/15
Correct.
Of 2015, did you take any steps to follow up with the purchasers? And if so, is that in the record? To follow up with the purchasers as to, hey, are you done with your allocation yet?
I don't have any specific recollection, but the other CPA firm that was handling it for the purchaser, we were having conversations off and on throughout that time because they were still working on the application.
Okay. Okay, that's it for my questions. Thank you.
Thank you, Mr. Denny. I have no questions. Unless you have anything further in your presentation, you will have an opportunity for a 10-minute rebuttal and closing after FTB makes their presentation. Do you have anything further right now?
Not right now.
Okay. Franchise Tax Board, 20 minutes for your presentation.
Respondent properly imposed a late payment penalty for the 2014 tax years, and appellants have not established grounds to abate it. Appellants had balances due with their 2014 returns, which were not paid until May 2nd of 2016, over 1 year after they were due. In attempt of establishing reasonable cause, appellants assert three main arguments. First, that they lack the necessary documents to determine their tax liability by March 15th. Second, that they relied on oral advice given to their CPA by respondent. And third, that they were reasonable to rely on their CPA for advice, none of which amounts to reasonable cause. First, addressing the lack of necessary documents needed to pay their tax liability. It's established law that a taxpayer's inability to obtain the information needed to make a reasonable estimate of tax is not reasonable cause. The fact that tax information is lost, lacking, inaccurate, or difficult to obtain is insufficient to meet the taxpayer's burden of establishing reasonable cause. Consequently, appellant's inability to obtain that allocation percentage from the asset purchase agreement does not constitute reasonable cause for making their payments late. Appellants point to the recent OTA pending precedential case of appeal of Harry Morin in support of abating their late payment penalty. This case was limited to its unique facts, and the panel considered multiple factors in determining whether there was reasonable cause. The OTA found that the inquiry of whether there was reasonable cause starts from the due date for the payment and ends at the actual payment date. In the case before us, the inquiry of whether there was reasonable cause begins on March 15, 2015, and ends May 2nd of 2016. Appellants were each involved in the asset purchase agreement with BNI Holdings, and the sole shareholders of appellants were Dr. and Mrs. Meisner. The terms of the asset purchase agreement indicated that allocation information would be provided 60 days after the closing date. Appellants argue, however, that this information was provided at a significantly later date, but appellants never indicated when they actually received this information. Moreover, unlike Morin, appellants have not provided what, if any, steps they took to obtain this information timely. The Morin opinion held that taxpayers must show the efforts made to acquire the information from the source and the difficulties in obtaining that information which led to the delay in payment. When allocation was not provided by, say, mid-February, an ordinarily intelligent, prudent business person would have reached out to BNI to obtain that necessary information. However, appellants have not provided any evidence as to their attempts to obtain this information. Furthermore, assuming appellants received the information just days before they filed their returns on September 14, 2015, a prudent business person would not have waited an additional 7 months to make payments to their liabilities, as appellants did in this case. In Morin, the OTA also considered the fact that a taxpayer believed his distribution was not taxable. Appellants here were aware of the fact that their income was taxable, and as evidenced by Ms. Denny calculating the aggregate tax liability. Also, unlike Morin, appellants were the direct parties involved in the asset purchase agreement. Therefore, they had control and were involved in the taxable transaction. Having that level of involvement would put them in a better position to obtain the information needed. Morin also considers as a factor whether or not the taxpayer has access to sufficient information upon which to base an estimate of tax. While the asset purchase agreement indicated allocation would be provided 60 days after closing, it also had a section on how to deal with tax treatment. Mainly that for federal and state tax purposes, Schedule 1.2A would be the closing date payment allocation. Therefore, appellants had the ability to use the contractual allocations in order to estimate their taxes, to mitigate or even completely avoid the late payment penalty. Next, addressing the alleged advice given by a respondent. Appellants argue that Ms. Denny conducted her own research and contacted FTB for guidance on how to make estimate payments for appellants. Appellants allege that FTB and Ms. Denny's own research suggested that Mr. and Mrs. Meisner's, the sole owners of appellants, make a combined estimate payment to cover both their personal and the appellant's corporate tax liabilities. Ms. Denny has not indicated what independent research has led her to this conclusion, and when asked about the details of the conversation with FTB, none were provided. Furthermore, respondents' records don't indicate that there was a phone call made during this time. Respondents' comments list marked as Exhibit 15 shows there's no record of a phone call that was made during the time period for the Meisners Paradigm, CSBTE, or CSBT Corp. However, even if appellant did advise, or excuse me, even if FTB did advise appellants over the phone to make a combined estimate payment for the Meisners and appellant's corporate tax liabilities, the Board of Equalization has held on multiple occasions that oral opinions offered by an FTB employee is not sufficient to rely on, and that tax liabilities must be based on law. The law is clear here. Corporations are separate and distinct from their shareholders. As such, payments made to the stockholders' account cannot be reallocated to a corporation's account. Furthermore, appellants and the Meisners have always in the past made separate payments for their separate liabilities. Finally, appellants argue that Ms. Denny incorrectly advised them to overpay the Meisners' individual income tax for appellants' corporate tax liabilities. Appellants argue that the advice to make this joint payment was substantive tax advice that meets the Boyle standard of reasonable cause. However, the Board of Equalization's decision of Rolsheimer held that a computational problem is not a legal interpretation, and taxpayers cannot hide behind an expert for the failure to properly determine the tax that was due. Similarly, in this case, there's no question of whether or not appellants had a tax liability. The only question that remained was how to divide that aggregate liability amongst appellants. Calculating each entity's share is a computation of tax and consequently not a legal interpretation on a matter of law. As such, Ms. Denny's advice does not constitute substantive advice and does not fall under Boyle. Furthermore, appellants argue, or excuse me, Dr. Meisner argues that he relied on his tax preparer, Ms. Denny, to make that payment. However, appellants can't delegate their responsibility of paying their tax by the due date, simply not a delegable task. It's also important to note that Ms. Denny alleges she intended appellants to make a combined estimate payment to the Meisner's individual account and then later transfer the payment to the corporation's account. However, this intention is negated by the fact that the Meisners irrevocably transferred any overpayment on their 2014 return to their 2015 individual account, suggesting they had different intentions for this 2014 overpayment. On the facts and evidence in the record, respondent respectfully requests you sustain this position. I'm happy to answer any questions. Thank you.
Thank you, Franchise Tax Board. Judge Brayton?
Can you tell me the authority that FTB relies on to refuse to make a reallocation when requested by taxpayers?
I think the authority here is just that they're different taxpayers. And the issue that was run into was we couldn't even if they had called in and we had issued that refund for the 2014 tax year, they had moved that payment to their individual 2015 account. So even if they had called in, requested, or turned in that claim for refund for 2014, and we issued a refund right away, we simply couldn't do that because that refund was reallocated to their individual 2015 account. So things could have gone faster had they not, on their 2014 return, irrevocably allocated that income or that overpayment to 2015.
And all the authority that you cite and so on, as I think about it, involve cases where a taxpayer actually hadn't made payments of tax. Are you aware of any cases like this where a taxpayer made a payment and the FTB was whole, the state was whole, so that as you're evaluating this authority, are you aware of any cases where the tax authority had the money, it just didn't end up in the right bucket?
I would have to look into the same fact situation for a similar case here. I don't have one in front of me, but if you need me to do further briefing on it, I can do that. But I don't know have the same exact factual situation
So you,
as here.
in evaluating this fact pattern, you didn't look for any cases that matched this fact pattern?
In terms of the actual estimate payment fact, no. But I think in terms of the reasonable cause and acting as a prudent business person, there are plenty of cases that are very similar, if not very different, when finding for reasonable cause.
Okay. Not right now.
Thanks. Yeah, I just have one question. Understanding what, substantive advice means is not the clearest thing in these cases. But in this situation, when the tax preparer, Ms. Denny, didn't know the allocation, isn't that substantive advice? How do you divvy something like that up? That doesn't seem to me like a simple math computation, or am I wrong on that?
I definitely don't think it's a simple math computation, but I think the advice to make that group payment or that combined payment wasn't necessarily substantive advice. That was just a procedural aspect of, this is how you should make a payment. And when making a payment or filing a return by a due date, multiple cases have held that that's not substantive tax advice. And if that was, there's a lot that could be covered for a CPA's mistakes. And there's a whole case that's a Ninth Circuit case that illustrates every mistake can't fall under boil. And if that was the case, it would just be a slippery slope of CPAs wanting to cover up their mistakes by alleging.
That was my point earlier, though. But those cases involve somebody that didn't pay the tax. This is advice to pay, just get it in the wrong bucket. So that's a distinction I'm trying to get you to help me understand why.
But I think what's unique here is that the Meisners are not actually parties to this appeal. They're a completely separate taxpayer. It's really just the corporations. So when involving a PIT taxpayer with a corporate taxpayer, it's almost more distinct and more clear that they're separate.
Got it.
No further questions.
I have no further questions. Helen, would you like to make you have 10 minutes for your rebuttal and closing?
Do you mind if we break for 3 minutes, or is that, I haven't been in an OTA hearing, do we jump right into this, or can we have 3 minutes to break?
You take a couple minutes.
Thank you.
We gotta.
We'll be very quick. 2 minutes.
2 minutes. All right. Less than 2 minutes. Less than 2 minutes. I just wanted to put it all together and refocus my brain.
We're ready. Okay, we're ready.
Thank you.
Helen, please feel free whenever you're ready.
So, a few things that I just wanted to go over. The OTA correctly focuses on this idea of there being no case. I couldn't find any case similar to this where reasonable cause had not been held, where there was a situation where the taxpayer actually made a good faith, credible evidence showing that he, she, it paid the taxes. Here we have a case where Dr. Meisner was communicating with Ms. Denny. It's very clear there was no cross-examination to refute that Mr. or Dr. Meisner did not talk with Ms. Denny. Reasonable cause and substantive advice, they're fluid concepts, we all understand that. But one of the most important things that this court states in Moran, you basically say, I think the appellant quotes the FDB Taxpayers Bill of Rights and says, hey, look, I'm not just supposed to throw money at the FDB. I'm not just supposed to throw money willy-nilly. I'm supposed to make a good faith attempt to pay my taxes. And that, in your opinion, Moran, that's pending presidential, was one of the things that you considered most important. Here, Dr. Meisner made the payment, and the companies tried to make the payment ostensibly for the companies. And it's very different than any of these other cases. I mean, these other cases, Berlsheimer, in particular, that's the case that FTB keeps on citing and keeps on using. It's entirely different to the facts of this case. There was no tax payment made in that case at all. It had to do literally with math. And that to me seems like a clear-cut distinction, unlike this case where there's impossibility of Dr. Mitsuru being able, or the companies rather, being able to figure out how to allocate tax liabilities and where tax liabilities would be. This idea of, hey, let me just put a bunch of different money in the different buckets when, you know, Dr. Mitsuru, through the advice of his CPA, thought this is sufficient. It doesn't make any sense, and it seems like this court agrees with the same, says the same thing in their opinion in Rand. You don't just throw money at the FTB if you're making a good faith attempt to pay the taxes. So I think that's what happened here. And you know, at this point, I'm just surprised that we're still actually sitting here. It's pretty clear that Dr. Mitsuru reasonably tried to make the payments on behalf of the companies, and the companies tried to make the payments. But that's all I have.
Thank you, Clint. Questions? Any further questions?
You know, can I say one more thing too, quickly?
Sure.
You know, the one other thing I just wanted to say too was, Ms. Denny, to some degree, the FTB had stated that, you know, she hadn't spoken to the FTB. It was alleged that she spoke. They didn't cross her at all. So by saying that, it's a little bit disingenuous. She was right here. She could have been crossed. She wasn't. In their argument, they're saying, oh, Ms. Denny never spoke to the FTB, alluding to that sort of thing. You know, this just feels slightly disingenuous. But anyway, that's all I have.
Okay, thank you. Thank you, both parties, for your presentations. The record in this appeal is now closed, and the appeal will be submitted for decision. We will endeavor to send our written decision no later than 100 days from today. This hearing is now adjourned. Thank you again to both parties.
Thank you.